Click the bell icon to get latest videos from Ekeeda.
Hello friends, let us discuss now one question where partners' capitals are adjusted in new profit sharing ratio and difference in partners' capital account is adjusted in cash. Let us go through the question. Dheeraj and Neeraj are partners in a firm sharing profits and losses in the ratio of 3:2. That is 3/5, 2/5. Their balance sheet as on 31st March 2012 was as under. Liability side, capital account of Dheeraj 50,000, capital account of Neeraj 50,000. These will be transferred to their capital accounts on credit side. General reserve 10,000. This will be divided between them in their profit sharing ratio 3:2. That is Dheeraj will get 6,000, Neeraj will get 4,000. Sundry creditors, bills payable. Asset side, land and building, plant machinery, furniture, stock, debtors, cash. Cash will be transferred to cash account. Debit side, opening balance to balance brought down. They agreed to admit Suraj in their partnership on 1st April 2012 on following terms. The new profit sharing ratio is specifically given here 3:1:1. That means Suraj is admitted for 1/5 share in future profits. Suraj should bring 15,000 as his share of goodwill of the firm and 20,000 as his capital. So he will bring 15,000 as cash towards goodwill. Cash will be debited, goodwill will be credited. He brings 20,000 as capital. Cash will be debited. His capital will be credited. Land and building to be valued at 90% of its book value. Land and building is 35,000. 90% of book value means we are required to reduce it by 10%. So we'll have to deduct 3,500 from land and building. Second effect, revaluation account debit. Plant and machinery and stock to be reduced by 5% and 10% respectively. That means plant and machinery we require to reduce by 5%. Plant and machinery is 49,000. 5% is 2,450. This will be reduced from plant and machinery. It will have second effect, revaluation account debit. Stock to be reduced by 10%. Stock is here 28,700. 10% means 2,870. This will be deducted from stock. Second effect, revaluation account debit. Reserve for doubtful debt is to be provided as 5% on debtors. Debtors we have here 63,000. 5% will be 3,150. This will be the amount of new RDD. This will be deducted from debtors. Second effect, revaluation account debit. The capital of all partners are to be adjusted in new profit sharing ratio by making adjustments in cash on the basis of new partners' capital. prepare revaluation account, capital accounts and new balance sheet. Let us do working note first to find out new profit sharing ratio, and based on that new capitals of old partners. In this question, new ratio they have given here 3:1:1. It is clearly given. So we are not required to calculate new profit sharing ratio, but we can find out new capitals based on this ratio. New profit sharing ratio is 3:1:1. New partner Suraj brings rupees 20,000 for 1/5 share. New partner's capital multiplied by reciprocal of his profit share. So Suraj brings 20,000 for 1/5 share. Reciprocal will be 5/1. So whole firm's capital is rupees 1 lakh. Now we can calculate old partners new capitals. New capitals of old partner is equal to new capital of firm multiplied by their profit share, that is new profit share. New capital of firm 1 lakh total capital. New capital of Dheeraj 60,000. New capital of Neeraj 20,000. We can also calculate sacrifice ratio of old partners. Sacrifice share is equal to old share minus new share. Old share of Dheeraj 3/5 minus his new share. It is 3:1:1, that is 3/5. In case of Neeraj, old share 2/5, new share 1/5. So sacrifice share of Neeraj is 1/5. In case of Dheeraj, sacrifice is 0. Thus, entire goodwill will be credited to Neeraj as no sacrifice by Dheeraj. Dheeraj has not sacrificed his profit share. So after admission of new partner, he continues to get same amount of share as before admission, whereas share of Neeraj has got decreased equal to share of new partner. Therefore, goodwill brought in cash will be entirely credited to Neeraj. Let us start doing postings. Capital account of Dheeraj Neeraj. It will be credited to their respective capitals account. Partners capital account credit. Buy balance brought down. Dheeraj 50,000, Neeraj 50,000. Relating to partners capital, we have another item general reserve 10,000. This will be divided among partners in their old ratio 3:2. Partners capital account credit by general reserve Dheeraj 6,000, Neeraj 4,000. Next we have sundry creditors 70,000. There is no adjustment on sundry creditors. It will be transferred to new balance sheet on liability side. Liabilities sundry creditors 70,000. Next we have bills payable 7,000. There is no adjustment on bills payable. New balance sheet liability side bills payable 7,000. Let us start with asset side. Land and building. There is adjustment on land and building. Asset side land and building 35,000. Next we have plant and machinery 49,000. Plant and machinery 49,000. Next we have furniture 2,100. There is no adjustment on furniture, so it will be directly recorded in outer column. Asset side furniture 2,100. Stock 28,700. Stock 28,700. Sundry debtors 63,000. Cash 9,200. It will be transferred to cash account. Cash account debit side to balance brought down 9,200. We have recorded all items from balance sheet. Let us start doing adjustments. The new profit sharing ratio will be 3:1:1. Suraj should bring 15,000 as his share of goodwill in firm. Now this amount is brought in cash, 15,000. So entry is cash account debit to goodwill account. Cash account debit side to goodwill 15,000. This will have effect in goodwill account on credit side by cash 15,000. This is for goodwill brought in cash. Now it is retained in business. So it will be divided in sacrifice ratio. Whereas among these two partners, Dheeraj and Neeraj, Dheeraj has not sacrificed his share in favor of new partner. So he will not get any share of goodwill. Here the entire amount of goodwill goes to Neeraj as he has made total sacrifice for giving share to new partner. So here posting is goodwill account debit side to Neeraj capital account 15,000. Here goodwill account gets closed. This will have another effect in capital account of Neeraj 15,000. Neeraj capital account credit side by goodwill for goodwill distributed amount is 15,000. Suraj should bring 20,000 as his capital. This will be debited to cash account and credited to Suraj capital account. Cash account debit to Suraj capital account 20,000. Partners capital account credit Suraj column 20,000 by cash 20,000. Land and building be valued at 90% of its book value. Land and building is 35,000. We'll have to reduce it by 10%, that is 3,500. Land and building 35,000 less reduce 3,500. So it will be now 31,500. This is 90% of 35,000. This will have second effect, revaluation account debit. Revaluation account debit side to land and building 3,500. Plant and machinery and stock to be reduced by 5% and 10% respectively. Plant 5%. Plant and machinery 49,000 less reduce 5%. It comes to 2,450. So now plant is 46,550. This will have another effect in revaluation account debit side to plant and machinery 2,450. Stock to be reduced by 10%. $2,870. Now stock is 25,830. Second effect of 2,870 will be to be debit of revaluation account. Reserve for doubtful debt to be provided 5% on debtors. Debtors are 63,000, RDD will be 3,150. One effect, revaluation account debit to RDD 3,150. Second effect, less from debtors on asset side. Sundry debtors less RDD. Net debtors are now 59,850. We have given effect to all adjustments. Let us close first now revaluation account. We have closed revaluation account. We got loss 11,970. This loss is divided in the ratio of 3:2 between old partner Dheeraj and Neeraj. Share of loss for Dheeraj 7,182. For Neeraj 4,788. Partners capital account debit loss transferred 7,182. Dheeraj 4,788 for Neeraj. Partners capitals as per our working note, Dheeraj 60,000, Neeraj 20,000. This will be recorded here on liability side. Capital account of Dheeraj 60,000, Neeraj 20,000, Suraj 20,000. These new capitals will be recorded to the debit of partners capital account. To balance carried down 60,000, 20,000, 20,000. These we have calculated as per our working notes. Let us close now partners capital account. We have closed partners capital account. Suraj 20,000. There is no difference on debit and credit. It's tallying. In case of Dheeraj, we got balancing figure on credit side 11,182. This will be transferred to cash. That means he is required to bring cash 11,182 to match his new capital. In case of Neeraj, as there is excess capital, we got balancing figure on debit side 44,212. This amount will be paid to him. So we have recorded here to cash 44,212. Now this will have effect in cash account. We have transferred amount payable to Neeraj on credit of cash account 44,212. Amount receivable from Dheeraj is recorded on debit side to Dheeraj capital 11,182. Now cash account is closed. We got final balance 11,170. This will be transferred to new balance sheet on asset side. New balance sheet asset side cash balance now 11,170. Let us close now balance sheet. We have closed balance sheet. Total of assets 1,77,000, which is equal to total of liabilities 1,77,000. In this question, we learn how to adjust partners capital through cash account. Thanks for watching this video. Stay tuned with Ekeeda. Subscribe to our channel Ekeeda. Thank you.